To our next event, having heard two great financial leaders of modern India, we move on with our theme. We have today with us an eclectic set of senior influencers of Indian financial world, collected together for a panel discussion on the topic. To moderate this panel, I would like to welcome one of the most well-known voices in financial media of the country, Ms. Lata Venkatesh, banking editor, CNBC. For our panel members, we have Alok Shirsagar, Senior Partner, McKinsey & Company. Nimesh Shah, MD and CEO, ICICI Prudential AMC. Anant Narayan, Professor and Faculty of Finance at the SPJIMR. Ketan Dalal, Managing Partner, Catalyst Advisors. And Samiran Chakrabarti, MD and Chief Economist, Citibank. Lata, handing over to you now. Yeah?
Okay. It would have been much better if Mr. Parekh and Arundhati Bhattacharya spoke after the panel. Now the thunder is stolen, but it's also left a lot of questions on the table, which we can perhaps take forward with this very eminent panel that we have. And this path to 5 trillion, really, I mean, I would think that the first path to 5 trillion would be good education. Sitting in SPGAIMR, I think that is the crying need, and to some extent, hopefully it is being met. But let's restrict it only to the financial sector. And let me start with the most immediate problem, and that is the NBFC issue. And whether that is something which we have to resolve first, because that is the most near-term problem, before we go and start looking at things in the medium term. The near-term problem is a bit forbidding. So since we have to speak about practice and what is actual first, let me come to that. To you, Nimesh. I mean, have we to wait for an FRDI bill? Is there no immediate solution to the NBFC issue? Can it kind of push back growth?
See, as far as the overall financial system is concerned, I've said this earlier also and I'll continue that, the overall financial system is not, is it a systemic issue or is it some balance sheet issues? That's the basic issue that I have always in mind whenever I've talked about this line. And I feel it is a specific balance sheet issues of some NBFC. Overall, if you see the system, what is the debt market and the equity market telling us? If you look at NBFCs, there are some NBFCs who have completely lost their market caps, and their market caps have become 1/3 of what they were earlier. But if you see the financial system in totality, or the NBFCs plus banks put together in totality as lending institutions, the market caps overall have only increased in the last 1 year. If I come to debt markets also are funding the NBFCs where they are comfortable with. So if you see overall NBFCs, I come from the mutual fund industry. So last year at this time, we had 4 lakh crore outstanding, 4 lakh crore plus outstanding to NBFCs. Today, we have got around 3 lakh crores outstanding to NBFCs.
Can you say with reasonable certainty that the big problem we face now, which is the funding crunch, 7.36 lakh crore was given from the bank and non-bank sector to the commercial sector, April-September 2018. It is 90,000 crore, April-September 2019, a fall of 88%. Are you somewhat sure that April-September 2020, we are back to the 7 lakh crore?
So that's what I was moving towards, that ultimately if in the system, there are some NBFCs who are getting the money and who are playing by the rule book, and they are getting all the finances and they have got all the businesses possible. So it is some of the NBFCs which are not getting the finances, and those balance sheets are an issue. I'm not saying those are not issues. That is leading to a confidence that we don't have the confidence in some of the balance sheets, and that way lending should not happen to them, and it's not happening, and we need a resolution for those NBFCs. But that is not a major part of the market. That's what I was moving towards.
No, I'm not worried about the market. I'm worried about the economy. So, Anand, let me get you on this. Are you, reasonably, can you be sure that unless we resolve this NBFC problem, even talking about 5 trillion at that moment is a bit too premature. Is it jacking the economy? I'm not speaking about market cap, and I'm not even interested in market cap. I want to know if economic growth will take off unless we resolve or see a way of resolving NBFCs.
So, Lata, look, I think we'll get to a $5 trillion economy anyway, as Mr. Parekh was saying. The bigger point I think you're making is, are we facilitating that, us reaching our potential fast enough? And to that, I completely agree with you. The state of the overall financial services ecosystem today is in no position to fund the investment cycle that we desperately need. Plenty of level of issues, and what Nimish said is right. There are some specific organizations which are at the heart of it. But I'll take a more broader 40,000 feet view of this, right? Look at the banking sector. While there's been an asset quality review, and now we know that it's 9.3% as of March 31st, Credit Suisse came out with this report saying, hang on, the ICA intercreditor agreement process is not working, and 2.4 trillion more of bad loans can come through there. Plus, we haven't got the full news on Mudra as yet. So there is still more bad news coming in on NPAs for banks. If banks is a problem, NBFCs is an even bigger problem, because the same financial stability report of RBI says that as of 31st March, NBFCs had only gross NPAs of only 6.6% of their advances. Reality is, as Mr. Parekh was saying, there is a trust deficit. Nobody believes that 6.6% number. If banks are at 9.3 and likely 12 by the time they finish, can NBFCs and HFCs put together be at 6.6%? Maybe they are, but there is a trust deficit on that number. If the difference is 6%, which is, let's say NBFCs are at the same level as banks, 6% more to go on NBFCs and HFCs of 36 trillion rupees, that's almost 2 trillion rupees. So you have a long way to go purely on recognition of the problem. Come to resolution. IBC, fantastic legislation. But how many names have actually got resolved through the IBC process? 1.5, 2? Again, the ICA process is not working. So resolution is taking time as well. It's a good legislation for going forward. It's not handling the stock. Last bit, what Mrs. Bhattacharya mentioned on the stage, when it comes to public sector, and for that matter, even private sector banks, a lot of reform of the ecosystem is required. Today, banks are more worried about NPAs, about not making mistakes on fresh lending, rather than concentrating on funding the next cycle of growth. So to answer your question, long answer, I don't think right now the financial services ecosystem is in a position to fund the next investment cycle that we desperately need. The good news is the resolution points of all these issues that we mentioned are available. So hopefully a panel like this and beyond can resolve this.
The issue, if I say, is it an NBFC issue or a real estate issue? I think one thing which is lockjamming the whole thing is the real estate space. Unless, and I think it will take 2 to 3 years, there is lending which has happened to real estate projects, which is half complete. And nothing is moving. No further construction is happening. Till that issue, till that building is completed and is sold and the cash flow start, till then money is stuck. So we are stuck into this whole thing. So I don't think it is that much of an NBFC issue. NBFC issue is a derivative. The real issue is the real estate issue. It will take 2 to 3 years to resolve, or some intervention has to be done over there. Government has announced something. Let's see how it works.
Yeah, I will come to the numbers of 5 trillion and discuss that with Samiran in just a minute. But Mr. Dalal, all this is now boiling to a legal issue. The finance companies is what we're discussing, but the non-finance companies, as Anand said, is also hanging fire. I mean, only one of the 12 marquee cases of the first round that went to IBC has got full and finally resolved. And the other marquee case is today 800 days in court, SR Steel, and no resolution. I mean, I'm genuinely worried that the financial sector issues will actually slow down the economy and keep it slow for some time. Do you think a legal remedy is
I think before the legal point that you raised, Lata, I just want to just sort of come back on the earlier points. And while I'm not an economist, I think you mentioned about the trust deficit. See, today what is happening is the good borrowers, first of all, are not willing to borrow because they've lost confidence. There are so many softer factors there, demand, slowdown, whatever it is. And so many of the potential other borrowers are...
Mr. Dalal, we'll come to that. I mean, that has been handled. I really want to get to the legal issue.
Okay.
Because I think the judicial system
Yeah.
is stalling progress. Would you agree?
Without doubt. So I think it's just not IBC, it's everywhere. But as you said, one of the very large cases is 800 days. And I think people are losing confidence because the value of time is not being perceived. I mean, I don't deal very extensively with the IBC cases, but let's say tax. You know how many matters are pending. So I think the whole judicial system, unless you have a time frame and the time frame actually works, you will have these issues because nothing just sort of happens. Look at NCLT cases on mergers.
The amendments also came with a time frame in IBC, but the courts have not respected that.
So just 1 minute, Lata. For a minute, just moving from IBC into other NCLT cases, simple mergers in Bombay are taking 8 to 9 months to finish, and NCLT was supposed to actually, facilitate.
Time bound.
It's not happening.
Alok, your take. Should we, I mean, as Mrs. Bhattacharya said, only wait for an ordinance or a legislation for the NBFC resolution, or can there be something before that? The ICA, intercreditor agreement, in the case of DHFL, although backed by all the three regulators, insurance regulator and SEBI, somewhat standing with RBI, have still not prevented the DHFL case from going to court. So now it looks like it's in the limbo because the courts will take their time. Is it only an act? Nothing short of that will work in NBFC resolution?
So I have two perspectives. One, I think there needs to be an urgent set of resolutions where you actually have, again, the instruments and the bodies, whether it's the financial sector, regulatory councils and other things like that, that actually need to take 7 or 10 of these NBFCs and resolve them as urgently as they tried to do in the steel cases. Now, it's true that it's got stuck. There was a period of time in which those 8 steel cases were looked upon urgently and in an integrative way. And if I may say, the difference here versus, say, the US financial crisis of 2008 is that here the names are well known, right? Then the contagion had spread because of the financial instruments. Here, we can easily name the 8 or 10 problem companies.
So you think a Reserve Bank or an FSDC,
An FSDC has been, doing meetings but not acting. They need to act.
It is only a meeting committee. It does not have a bureaucracy.
But they can have the ability. I appreciate that. But I think that...
So your answer is that an interregulatory body, which has one representative from all, or has an altogether new entity like a resolution corporation, is the need of the hour?
I think in the short term, before you get to an ordinance or an act, you have, through at least reporting to the FSDC, you can create a committee of people to actually resolve these issues. The reason I'm emphasizing this is because the logjam exists, and I'm being very direct, extremely poor understanding of business by regulators, especially mid-level people, very poor understanding by the legal system, and lots of collusion and corruption in the system. That's the issue. And as a result of which, you have stuck, and all the cases you're talking about are because of that. The reason I'm saying this is you have to separate out fundamental issues like real estate, which will take 2 or 3 years, particularly residential, from resolution of problem cases today, where even the names you've mentioned, these have been known for the last 2 years, and people have just been pushing the ball down.
No, actually, well, I was a little hopeful about the intercreditor agreement in the DHFL case, showing the path. But with it going to the courts now, it genuinely looks that that hope has been snuffed out. So law it is. You believe there is an intermediate solution possible?
If you don't now, if the government is willing to do lots of Friday announcements, right? One of the Friday announcements should be that we need to resolve these 10 cases. Right? I mean, sorry, if the finance minister today...
Unfortunately, the 12 cases, even in steel, only one has been resolved.
I appreciate that, but there was at least an effort, right?
Certainly,
I'm just saying a similar effort has to be made. Steel is obviously politically easier to understand because of thousands of jobs. We need to make the link clearer, and this is part of and the role of the financial sector or the CFS, is to make the linkages clearer, right? The NBFC liquidity crisis has led to a real shortfall in auto, has led to a shortfall in consumer durables, has led to a falling apart of supply chains, right? And you have to show the linkages. You can't otherwise think it's a financial issue. It's actually a jobs and employment issue.
Okay. Well, now let me come to the economist. Somiran, actually, I wanted to start by putting the math of 5 trillion. Even if you kept the dollar-rupee steady, you need a nominal growth of, I think, 12.5% CAGR for the next 4 or 5 years to reach $5 trillion. and we cannot be so sure that the rupee dollar will be steady. First things first, do you think that the GDP growth is at least on an incline? Will we be able to get a higher than 8% growth without the help of the base? Or do you think the financial sector is, stopping that growth?
So the 5 trillion number, let's put the math straight on this. So you need to get about 8% real GDP growth, about 4% inflation. And if you want to achieve it by 2024 in 5 years, then by the end of 2024, rupee should not be beyond 75. Now, all these look to be difficult ones, but let's, for the moment, assume that 8% is possible, or we have to get to 8%. What do we need to get 8%? So last year, we did a massive exercise of looking at 25 countries' last 70 years of data to see what are the preconditions required to get to 8% GDP growth. And what came out was two very simple metrics. One is you have to get investment growth of more than 10%, and you have to get productivity growth of 3%. India, over its independent history, had only one decade of more than 10% investment growth, that's 2000 to 2010. And India has never had a full decade of 3% plus productivity growth. In fact, only in 2 years in last 70 years, India has ever touched 3% productivity growth. So the problem is both sides, that while we are talking finance, finance feeds into both investment as well as into productivity. And that's why the role of finance is so crucial. So while we discuss these NBFC sort of issues, sometimes the numbers have to be told to be believed that how large the swing has been. The swing is 4.5 lakh crores of NBFC credit incrementally has swung in 1 year. Now, you can think of the credit multiplier on top of it, and you realize that why all of us analysts got our growth forecast wrong in December 2018, predicting 6.5–7% GDP growth, and now seeing a 5% GDP growth. Because nobody would have expected the challenge to be this big. And that's why I somewhat disagree with Nimesh's characterization of the problem, that it's probably not an issue of just 7, 8, 10 of them. 7, 8, 10 of them could have a solvency issue. But I think the liquidity issue and the cash conservation issue is for a much wider system. Otherwise, we wouldn't have seen this kind of a swing in credit. And if that's the case,
4.5 lakh crore for NBFCs.
Just for
but
NBFCs.
If you look at banks, it is another 4 lakh crore because they were 1.8 lakh crore plus last year. Now it is minus 1.3 lakh crore.
So the interesting bit is that while all this is happening in the domestic side, including even CP issuances swinging by almost 2 lakh crores, there is a significant increase in ECBs and a significant increase in FDI.
Yes. But do they compensate, and how much?
They don't compensate. I'm simply saying that that's a loose indicator. I'm using the word loose indicator of credit demand in the system. So it's more of a credit supply issue in my mind and less of a credit demand issue. Beyond a point, these distinctions are artificial. But at least to start with, we have to understand that there is a certain momentum in the economy still there, which you asked me that whether there could be a pickup. That pickup can happen with this momentum if the credit supply problem is resolved.
Well, we had two bankers on the channel yesterday, the largest banker and the largest private sector banker, both of them claiming that it is a demand issue and that they are sitting with money, but corporates are not coming and borrowing. To get back to Mr. Dalal's point, that people are scared to borrow at this juncture because they can't see demand.
So you have a 2 lakh crore excess liquidity in the banking system. But where is that money going? That money is so risk-averse, it's going to the RBI's reverse repo window and going to actually SLR increasing. SLR has increased almost 1.5 percentage point in the first half of this year, from 25.5 to 27.2. And my sense is this is more of risk aversion than lack of credit demand, but obviously it will require a much more research from the CFS to find out that whether it is more of a credit demand issue or a credit supply issue.
Okay. Well, let me then just try. Alok, what is your guess? Is this a demand issue or a supply issue of credit?
I think in many sectors there is a demand problem. I think the supply.
Well, automobiles for one.
Yeah, automobile is a problem. I think parts of consumer. I think you look at top 15 cities, there's a problem. There is less of a problem, by the way, in semi-urban and rural India, more of a problem in urban India because of the lack of sufficient jobs and growth and things like that.
Tractors fell.
But
So-
tractors fell off a very high base from the previous year.
Okay, well,
So you have to look at the
negative terrain.
the tractors is different economic cycle, right? So I think it's important that we are much more granular about this in terms of saying which sectors and which geographies. And I think if you look at that picture, I think we do have a demand problem in
Yeah,
urban
you know,
India.
the same RBI data, same RBI report, which showed the swing in credit from 7.4 lakh crore to 90,000 crore, also showed that capacity utilization has fallen quarter on quarter from
That's right.
76 to 73%. And consumer confidence at 89 consumer confidence index is, I don't know whether it's a 7-year low or a 10-year low. I mean,
Lowest ever.
lowest ever.
Can I add to that, Lata, very quickly? While I agree with the points that Somiran is making, I think it's important to note that India is not a borrow-to-spend economy. We tend to be a borrow-to-produce economy. Bulk of the credit demand tends to come from people trying to produce. So outstanding debt, if you look at it, household debt is, or consumer debt is about 14% of GDP, whereas your corporate debt or non-household debt is 54% of GDP. So if there is a slowdown right now, I think a lot of us has to do with the demand side. To your point, if your capacity utilization is 73%, and by the way, if you look at it sectorally, it's really abysmal in some of the big borrowers really. The bottom line, Lata, is we don't have an investment cycle today. To your point about needing 10% investment cycle, if you don't have an investment cycle, where is the need for funds going to come on?
I am warned that we have only 20 minutes left, so we have to look for solutions. Therefore, let me start again from Samiran. Samiran, since you all have clearly speaking about lack of an investment cycle and lack of any appetite to produce or even need to produce since there isn't demand, Samiran, is the answer that the government should spend without thinking too much about the fisc? Never mind if the 10-year borrowing rate goes to 7%, government should spend. 60,000 JNN URM buses or something like that.
So the problem that we have is that over 2 decades almost, in the 3 decades, we have slowly moved to an idea that government should be less interventionist. So minimum government, maximum governance. And suddenly when we fall into a crisis, when we try to shift for the government to be more interventionist, more expansionist, that creates a friction within the system. So this is what we are seeing today, that while Alok was mentioning that we need government to directly get into this, solving these 8-10 issues. The problem is that people will say, well, why are you so interventionist?
No, I completely take your point.
So I'm just coming to your fiscal issue. So similarly with fiscal, that we have been almost given this gospel of truth that at any circumstances, your fiscal numbers should always be on that glide path to 3%. I get it. I've also been trained in a neoclassical school of thought that the need to keep fiscal under check. But there are times when you have to say that we have to get into a more expansionist fiscal stance with 2 conditions. One condition is that your fiscal spending has to be very quick, and the second condition has to be you have to be similarly very quick in rolling it back.
Okay.
So
Actually, if I unleash Anant on you, he will tell you
had the same
that
discussion.
the fiscal deficit is 9% of GDP at a conservative estimate and nowhere near the 6%, 3 plus 3, state and center. But I'm not getting into that discussion because, we are looking for solutions now. Mr. Dalal, in 1991, we saw a shift in growth from a Hindu rate of growth of 3.5% to 6%. It was not a fiscal multiplier. It was a growth multiplier. We saw less government. any idea, since you are a taxman, as to how to unleash growth, without fiscal expenditure if possible?
So I think Mrs. Bhattacharya talked about consistency, and I think having dealt with foreign investors over many years, they just get frightened, Lata, we all of us know that, of lack of consistency. They also want a policy framework. So for example, we have had this talk about the new industrial policy, and I hope that comes, and I hope it's sensible, because they need to see a framework. They need to see that things will not change suddenly. If I were to just talk about tax,
Is that enough? Just consistency
No.
and no retrospective legislation?
No, that's not enough. I'm just saying that is one of the building blocks, because you need a whole host of things, Lata, to obviously come together. So, since you said I am a tax person, we had this direct tax code draft, It is not even in the public domain. You had some Ishwar committee report, which I believe was very good. Part 2 of that report never saw the light of day. We just know from rumors what is inside. Now, so I think consistency, transparency, and thought-through decisions which can then be put on the ground, debated, and quickly taken to logical end, I think is important. I think that's the way I would put it. These are some of the building blocks.
Okay. Sabiran, just to come back to you, you said quick expenditure. Somebody was suggesting, double or treble MNREGS spend. Is that a way out?
I mean, to be honest, I don't care much about how you spend, because that's a discussion which a macroeconomist should never get into. This is not my job.
It's a bureaucrat's job.
It's a bureaucrat's job to figure out. I can give a broader perspective on what kind of schemes I like, but exactly which one they're in a position to spend, that only somebody sitting in the government will be able to tell you better. The challenge is that even schemes which you feel could have a quick delivery, like the PM Kisan scheme, it appears that not even half the amount is getting delivered.
No, that's exactly why I didn't ask you PM Kisan, because I thought MNREGS at least is an older scheme and has a bureaucracy in place, so maybe it will deliver.
If you look at simply the inflation-adjusted Narega number, that's horrible.
Yes.
So,
I mean, they're static at 40,000 crores, so inflation adjusted, I guess
barely,
it's half.
barely nothing has happened. So all the stimulus in a rural economy where, because of productivity increase, there is a surplus that is getting created and the consumer is benefiting from that surplus through lower food prices. How do you transfer that surplus to the producer?
We have not
found an answer to that.
Well, I am looking for quick solutions. So one suggestion, Anand, to unclog the economy. I'm not even looking at 5 trillion. I'm looking at growth. Can we go up from 8% quarter on quarter?
Lata, I think there is no way out other than deep reforms. I'll start with one. You talked about financial sector. We have a problem of NPAs, and we have a problem of a trust deficit around the NPAs. Doing an asset quality review of NBFCs will give heart attacks to half the people in this room today. But at some stage, to restore the trust deficit, you have to come to the truth, but with solutions around. And to Nimesh's point of real estate and to other points about clogged up, I think we need something like a bad bank to be set up by the government to absorb whatever you have as NPAs which come out. It's a terrible idea for a lot of us. I know Harsh has written about this in the past as well. But I think given the fact that your NCLT process and your IBC process is in its infancy, going through teething issues, you have no other chance but to actually go through a process where you sterilize the NPAs around, and then initiate reform of the financial ecosystem.
So time permitting, I'll come back to you for you to explain how the bad bank idea could work, what examples. But Nimesh, one idea which you think will at least unshackle us.
Building upon this one, today what we need is to trust a balance sheet and give the money on that. So if that is to be done, as you said, an asset quality review, I believe to a great extent the NBFC, rather than trying to create a separate bank account, most of them, we might have to, if there is a ALM mismatch, and to a great extent, I know the extent of losses, because today they are declaring 1% NPA, right? They have got a developer book and they are declaring 1% NPA. So come down to 9, 10, 11, 12, 14% NPA, whatever is the situation, so that I can trust you better. If an asset quality review needs to be done on the NBFCs, and then the trust automatically it will flow in. And I believe that if the banking system, see today when as a mutual fund, I'll always keep on looking at what are the banks doing. Okay. If the bank exposure has decreased in the last 1 year, we are not going to get in. Okay. So banking system, whatever announcements we are doing, has to be followed up by action by the banking system. If the banking system action, if we are correcting the balance sheet, stating as it is today, and banks are supporting it for the next 8 to 10 years, all of us will be in with them.
Supporting whom? The NBFCs, you mean?
The structure, right? The structure. If it has to be merged, it has happened in 90s also. A lot of NBFCs were taken over by whether banks or NBFCs. So similar kind of those, what he had mentioned earlier, that 8 to 10 organizations, let's create solutions for that. The way we had done for the steel industry or any other industry, financial services, it is possible. And mergers and acquisitions can happen in that space. Then you declog the whole thing.
My only fear is if Mrs. Bhattacharya were here, she would have squirmed because everybody would expect SBI to buy one piece.
It need not be. It need not be. Some of them have got a good franchisee. The retail franchisee, a lot of businesses that they have done, a part of that will be toxic, a part of that is good. Even in the most celebrated cases, the retail business was good.
My big problem is we are not able to get that institutional framework which separates the good piece, sells it off, and separates the bad piece, because by the time we come to that...
Don't wait for it to, a crisis to come up. As his suggestion, where that we need to, there are 7 cases, all of us know which are the 7 cases, get them and resolve them. Whatever operation needs to be done, do it today.
See, I was in New York in the financial crisis working on restructuring of the global financial institutions that weekend in September. That weekend in September, all the regulators got together, made 5 phone calls. Stuff happened that 14, 15 September. Okay? As a result, TARP came through. I happened to be right there. The decision making was quick, and it was across the Fed, Treasury, people in the financial institutions, and frankly, with the fact that many of the regulators and policymakers.
TARP is the need of the hour?
This has been a need of the hour 5 years ago. Right? Right now, we're sitting after the patient is nearly dead in ICU. When we had the heart attack, we should have solved it, right? And I give a lot of, let me be more courteous in a public thing to say that there's a lot of misunderstanding about what a bad bank will do, because there's all this social issue about, are we rescuing developers, are we rescuing bad people, et cetera, as opposed to separating out. You can still put some of those people in jail, but rescue the actual institution, recover the assets, which is, of course, what the TARP did. Now, you asked me the question of what the single sector that needs to be addressed is real estate and construction. In order to address that, you actually need to help the supply chain of that, right? So it's the construction, others who are often also in roads. So the government, to me, doesn't need to go spend on MREGA. They actually need to do what they said, which is make the payments on time, resolve any of the arbitrations, and get the government marketplace, the GEM marketplace, to actually work, right? So if you spend the money there, you're actually creating more private sector jobs and more capability.
So government making its payments on time, and government, ensuring that arbitration ends at some point and money is paid is clearly one very big, fueling of a clogged system. I mean, I take your point on that. But since we have 9 minutes left, we have, can we hear out the bad bank idea?
I must put the caveat first. It's not just about the bad bank. There's a whole host of sectoral reforms which need to be done. And the ease of doing business, which Mr. Parekh talked about, land, labor reforms, is critical as well. But let's stick to the bad bank. Look, I think Alok put it extremely well. This is not about giving a bailout to bad people. The entire post-mortem, sending people to jail, can happen separately. This is about trying to rescue a system which needs help, right? What are we trying to do? We are trying to say, let's take out, the IBC process is fantastic, but it's going through teething issues, and you can't stop that in a democracy like ours, which has a judicial system, right? So it has to work itself out. I think for the flow going forward, it will work, but for this huge stock that we have, which is not yet fully recognized, we have to find a solution. So what are we saying? A very similar situation was faced by Malaysia in the aftermath of the Asian crisis in 1998, where they had this whole, in fact, it was much larger. It was 30% plus NPAs in many financial institutions. What did they do? They came up with a very nice structure. What they did was, they came up with this government-backed entity, in fact, this Khazana-backed entity called Danaharta. What Danaharta did was, it gave out a bid for every single bad asset in the system. So they said, okay, you got 100 Malaysian ringgit loan, I'm going to bid 50 ringgit for it. A bank was free, or an NBFC was free to give it at 50, or say, hang on, 50 is too low, I'll not give it. If you didn't give it at 50, you had to take a penal provision down to 40, which meant that it was really very expensive to hold on to that loan because you had to take a large provision and loss. On the other hand, if you gave it at 50 and the recovery process actually yielded 80, 80% of the difference went back to the original institution. So if a CIMB or Maybank sold at 50, recovery was 80, then you got 24 back as a result of the recovery process. So the incentives are perfectly aligned for the institutions to give out all these bad loans to the Khazana-backed Dana-Harta. Dana-Harta, because it was government-backed, then the Malaysian government went about changing regulations. They went about speeding IBC. They went about speeding NCLT with no questions of moral hazard. It's a government-owned entity. Yes. So there's no intercreditor agreement of 20 people having to get together and agree on the resolution. It was very cleanly done. 5 years, the Dana-Harta closed itself down with 59% recovery, which was tremendous in that point in time. I think we need something similar. Obviously, we can learn from past experiences, but we need something like a Neelkant to actually draw out the poison, keep it aside, and then do your post-mortem, beat up people, reform the system to ensure it doesn't happen again.
Okay. Well, that's a big solution that Anant is offering. It's just that at the moment, the government is actually thinking of demonetize is the wrong word, trying to sell off its own assets, monetize its own assets. Now we are asking it to buy new assets. I think it's...
but there's no confusion there, actually, because the monetization of assets, if you look at the toll operator transfer process or others, actually has brought in new investors. So Macquarie, for example, came in a big way.
And they're very sorry for it, anyways.
No, not on specific roads. We've got to separate the roads out. So the reason I'm saying that is you need to separate two things out. The government can and should privatize and monetize. That's the way to get foreign capital, because
and
foreign
still
capital
asset monetize.
Because they want brownfield capital, brownfield assets. They're not going to do greenfield. That's one track. The second track is to deal with the troubled assets.
Okay. No, I take your
Just
point.
One last point, Lata. Nimesh made a good point. A lot of the issues are in real estate, but I think the issues go beyond real estate as well. Power sector, airline and shipping, construction, a whole bunch of issues are there. I would therefore plumb for a larger solution. Okay.
5 minutes left. I think that included questions from the House, but I have one question for all of them, and I request you to keep it monosyllabic. $5 trillion economy by when, Samiran?
I think everybody knows the answer.
No, I don't want the government's goal. That is 2024. I want your realistic assessment.
No, our report put it at 2025.
You still stand by it?
It's not impossible. The difficult one is actually, to be honest, the exchange rate forecast. I think the growth or inflation numbers are...
2025, 5 trillion is not my number, your date.
So I don't want to hazard any monosyllabic or other answer, but I think unless a large number of issues such as this and the ease of doing business, and I have a lot to say on that, but there's no time, is addressed, I think we are looking at something far beyond 2024 in mind.
Anand?
So the only thing we learn in MBA education, the answer to every question in life is it depends. It depends.
But even on it depends, you are not giving me a date. Nimesh, you want a hazard?
No, I don't think there's any point. We don't give out anywhere future numbers.
For the economy as well. Oh, I like that. But you're not working in a bank, you're working in an AMC.
So mutual funds are not supposed to. Mutual funds are not supposed to. Indicative returns we don't give.
Indicative returns are only
This is somewhere
goal for the economy. I think all of you are playing,
I think it's an irrelevant target.
Why
because,
is it irrelevant? It's
frankly, no, I'll tell you why. The real
That's
issue,
the other MBA answer. Question is
it's irrelevant because at the end of the day, what we have to care about for all the obvious reasons are jobs and earnings in Indian rupees. And we need to care about what is it going to take to get appropriate foreign capital, not just in US denominated. So 5 trillion is a nice slogan. It may happen 26, 27. That's not a goal that should be the purpose. The purpose is actually around jobs here. And the income is just a derivative of that.
Okay, well, I have not got straight answers from any of my panelists. The House is open. Yes.
Samiran will bear me out on this. We did this report 2 years back for FICCI, the $5 trillion economy, and we had said that it will not happen. So this happened 2017. It was an SPJMR FICCI report. Okay. And the path to the 5 trillion and so on was kind of laid out there. But my question is this. We haven't heard anything about the household financial savings in particular. And your net financial savings have actually gone down And the household savings going down and the household leverage going up is one of the main reasons. So where does the role of the financial sector there come in? Because yesterday SBI has cut its rate, the savings deposit rate. So what are we looking at here then? And because you said the investment
I think it's your question. Do you see the household savings troughing out?
So on the face of it, household savings has fallen from about 25% of GDP to about 17% of GDP. If you properly adjust for statistical anomalies, the number is probably smaller. The decline is smaller than what it looks like. So few things are happening at a behavioral level which we have to understand. I think one of the key issues is inflation targeting. So earlier, when somebody was planning his retirement corpus, he would be looking at it in terms of 8–10% inflation and have a much larger retirement corpus in mind and consequently save more. Today, you are probably looking at a 4–6% at max inflation. Automatically, your retirement corpus requirement, savings requirement will be lower.
Is that why households are deleveraging?
That is one of the reasons. That is one of the reasons, quite plausible, that there is a decline in savings. I'm talking, which is not obvious. The obvious answer is that there is not enough job or income growth. That we all know.
I think our question is, with the cutting of rates, do you see it troughing out? Do you see household?
The household savings
because
is
the incentive
not
to save will be less.
Household savings as an aggregate is not that responsive to nominal interest rates. The household allocation of savings between financial and physical might be a function of interest rates, but not the aggregate savings.
So that is a function of income, right?
Aggregate savings is a function of income, which is the normal answer. I did not give a normal answer. So I was saying, what are the interesting answers? So one is this particular aspect, which is the inflation targeting part of it. The second interesting thing is that we are now in almost second, third generation of wealth. So obviously, in that generation, the propensity to consume will be relatively higher, and your ability to leverage will be much higher. So why would you save?
I have a living example in my house. So I agree with you.
Can I add to that very quickly? I'll give you a slightly different perspective, Tulsi, and we've discussed this. One is the nature, the quality of the savings has actually improved. A lot of the drop in household savings is because we are saving less on real estate, on land, and on gold. Financial gross savings has remained reasonably static. What has come down is financial. In fact, a lot of the good, a lot of the good work is done by people like Nimesh, etc. And Arundhati Bhattacharya talked about SIPs, which is a great positive. So gross financial savings is doing reasonably well. What's come down is actually net financial savings, which means households are borrowing more, which, by the way, is not a bad sign. A lot of SME loans, your Mudra loans, etc., get classified as small loans, and therefore, borrowings going up there is not a bad sign by itself. But it does underline the part that what Mr. Parekh mentioned. As a country, we have no choice but to soak in external savings, which means all of the stuff that we do around reforms and ease of doing business has to be towards ensuring that we get a regular dose of FDI and equity and debt flows coming through. That need is just underlined by the fact that our household savings on a financial basis is unlikely to grow from here.
Okay, I mean, we can have a bigger discussion on financial savings, but yes, please, sir. It has to be the last question. Oh, 6 minutes. Okay, we can take 2 then.
Given what Ms. Bhattacharya said earlier and some of the points touched by the panel now, do you believe there's a case for reprivatization of the nationalized banks and use those proceeds to fund and capitalize a bank of the development bank, which could then fund the infrastructure or projects which today the commercial banks are unwilling to do so?
Okay, well, I thought of that as a vertical of, public sector banks, but since Mr. Bhattacharya had spoken about it, I stuck to NBFCs. Anyone wants to take that? Reprivatization of banks?
So I actually think let's separate out the purpose of infrastructure financing and support for that from reprivatization. I actually think that, for example, an organization like NIIF, which has come up, 49% government, 51% private, has raised money from all major global investors, is a great example of how you can have new instruments to support infrastructure financing, right? So they've already got a few $1 billion more to come. And I think we all should actually learn more about how that structure has worked as the right sort of public-private partnership of 49 government with 51 private. And they are actually doing a lot now. You'll see a few deals get announced in the next few weeks to actually take a bunch of these troubled assets off public sector banks and into a commercial structure with a longer term orientation. Similarly, with InvITs and other financial instruments available, there are ways to monetize the assets through those. So I think for the government, I don't know whether we need another new institution, but we need to use the instruments we have and the institutions we have in a much better way. As far as the reprivatization of public sector banks is concerned, unfortunately, this is a political issue, not an economic one. There are many examples. DBS, celebrated bank around the world, was of course a public sector bank that with Temasek support was privatized and actually does extraordinarily well.
No, actually, when I spoke about the 1991 revolution, what I had in mind is that if you have to replicate 1991, I think it's exactly what is suggested.
Can I add to that, Lata? So, in fact, Harsh has just walked out, and he was part of the original PJ Naik committee. Those recommendations, I think, would answer your question, sir, about privatization. And all the issues that Mrs. Bhattacharya mentioned about not being able to hire people at market prices, etc., go back to what the PJ Naik committee tried to resolve in coming out with this. And you made a good point about DBS. I think what PJ Naik committee says is not privatization to start with. Yes, it's an end goal eventually, but what it says is at least give autonomy to the bankers. You have excellent bankers, let them do their job. And what it proposed was a BIC, a bank investment company, along the lines of a Temasek, which would separate and build the distance between North Block and banking.
Yeah, I mean, just bring it below 50%, and then you won't have
and
a
bring
CAG
it under Companies
and a
Act,
CVC.
bring it under Companies Act, and therefore no CAG, CVC, etc.
Yeah. In any case, I mean, just as an aside, I did ask a couple of very large private bankers whether they would buy, say, a UCO or a IOB, any one of the banks. And they said, provided you ring fence the pension and take it out, only then we'll buy. So question of getting money for it doesn't exist. It actually means the government will only stop hemorrhaging. I mean, no kitty, I guess, is a better answer. We have 3 minutes left. This is like some Akshay Patra. The time keeps growing. One more question, yes. Oh, this is excellent. All questions answered. Gentlemen, thank you very much for what was a very fruitful discussion.
Thank you, sir. Thank you. You made it very good. Very good.
Thank you, Lata. Thank you, panel, for an excellent discussion. I'll request you to wait for 2 minutes. We have small souvenirs to hand it over to you. May I invite Professor Neeraj, head of CFS, to hand over the souvenirs to the panel members. Thank you.